In this video, we will discuss a new statement called the Schedule of Cost of Goods Manufactured, also known as the manufacturing statement. The idea behind the manufacturing statement is very simple. We want to determine the cost of goods manufactured for a particular period. For example, if the only product a company made was chairs, the manufacturing statement would answer the question, what is the total cost of the chairs that were finished in this period? Of course, many companies make several different products, and if that was the case, the manufacturing statement would find the total cost of all the products manufactured in that period. But the cost of a product means a very specific thing to a managerial accountant. To find the cost of a product, we add up the three manufacturing costs which were introduced in the previous video. These are the direct materials, direct labor, and factory overhead. If anyone asks you how to find the total cost of a product that was manufactured, your response should be like a reflex.
Luke, would you happen to know what the three product costs are? The direct material, direct labor, factory overhead. Direct material, direct labor, factory overhead.
Seriously though, the three product costs are so important that you really should be dreaming about them. Anyways, these three costs make up the three main sections of the manufacturing statement. Now let's look at an example of a manufacturing statement. So we have the template over here with the three main sections, direct materials, direct labor, and factory overhead with lots of white space where we will be filling in the accounts and the numbers. And then at the very end we are going to get the cost of goods manufactured. Now I have all of the relevant information over here needed to create the manufacturing statement, just basically a bunch of different accounts and their balances. So before we get started on actually filling in the numbers of the manufacturing statement, there's a simple concept underlying some of the calculations, and I want to illustrate an example using a cookie jar. Let's say that I really like cookies, and sometimes I can't remember how many cookies that I ate in a day, but I always keep a record of how many cookies are in my cookie jar at the beginning and end of the day, as well as how many cookies that I purchased. Let's say that I begin the day with 4 cookies in the jar. We'll call that the beginning cookie balance. Let's also say that I purchased 3 cookies during the day, which got added to the jar. We'll call these cookies the cookie purchases. That would bring us up to 7 cookies in the jar, or our cookies available. Let's also say that there are only 5 cookies in the jar at the end of the day. We'll call that the ending cookie balance. If we assume that I'm the only one eating the cookies, could you figure out how many cookies that I ate? I'll give you a moment to think about your answer. It should be obvious, right? If I have 7 cookies available after my purchase and only 5 left at the end of the day, I ate, well, 2 cookies. Mathematically, that would be 7 minus 2 equals 5. Take a moment and make sure you really understand my example, and now I'm going to change it to make it applicable to a manufacturing statement. In a manufacturing statement, instead of wanting to know how many cookies were eaten, we want to know the amount of direct materials used, so just change the labels. Instead of beginning cookie balance, we have the beginning raw materials balance. Instead of cookies purchased, we have raw material purchases. Instead of cookies available, we have raw materials available for use. And instead of cookies in the jar at the end of the day, we have ending raw materials balance. Now, since we're solving for the direct materials used, it makes sense to put those on the right-hand side of the equation. So we can algebraically just switch these two around, and then we'll be left with ending raw materials balance right here, and then the direct materials used over here. So in summary, we have the beginning raw materials balance, looks like 4 logs of wood here, and of course this would be the cost rather than the individual items. So we take that cost, we would add the raw material purchases, that would give us the raw materials available for use, looks like 7 logs here, and if we subtracted the raw materials ending balance, that would give us the direct materials used. And this is the exact form that you're going to see on the manufacturing statement. Alright, we are here back with our manufacturing statement, and we are going to complete the direct materials portion right now. So I'm just going to paste in those labels that we just discussed. We want to find the direct materials used in this period, and we can do that by starting with the beginning inventory of raw materials, January, and then adding the raw material purchases. That will give us the raw materials available for use. And then we have to subtract out the ending inventory of raw materials from December 31st. And that will give us the direct materials used. So I've highlighted some of the important accounts over here that we're going to need to use. First we have the beginning balance of raw materials inventory. That is $4,800. And then we have to add to that the raw material purchases. Those are down here for $11,000. And when we add those two numbers together, I'm going to use a sum function really quick. That gives us $15,800 of raw materials available for use. Now we can subtract the raw materials inventory at the end of the period, and that's right here, December 31st, for $6,000. So we can use parentheses to denote that that's negative. And so we have 15,800 minus 6,000, and that's going to give us the direct materials used. And I'm going to do that in this column over here. If we subtract those numbers, we should get $9,800 of direct materials used. Now the next section, very easy, very simple, direct labor. All you'll need to do is just list whatever the direct labor cost is. And we can see that's right over here for $10,000. So I'm going to put that right here. Alright, the next section is factory overhead, which is also not too bad of a section, a little bit more work than direct labor. All we need to do is pick out the factory overhead accounts that are listed over here on the right. And remember that factory overhead will include any product costs that are not direct materials or direct labor, so any of the indirect production costs. So if we look over here, any cost that's going to be related to factory or production is going to get listed here underneath factory overhead. So maybe I'll give you a moment to see if you can pick out the factory overhead costs here. There are 5 that are going to need to go here, and I'll give you a hint, it's not one of the ones that's cut off here. So I'll give you just a moment to see if you can pick those out. Okay, we're here back with the answers to the factory overhead section. So I've just picked out the relevant accounts here from the right, anything that had to do with factory or production. So we had depreciation expense, rent expense on the factory space, factory maintenance expense, the various production costs, and also indirect labor costs. We assume that's related to the production. So all of those things got listed here, and I added all those numbers together, and that gave me the total factory overhead, which is $8,500. Alright, now that we've finished our 3 main sections, direct materials, direct labor, and factory overhead, and we have these 3 totals, we can add those up, and that will be called the total manufacturing costs. So if I sum up those 3 numbers, we will get a total manufacturing cost of $28,300. Alright, we are almost finished. We have to just complete one more small section here to find the cost of goods manufactured. Now you might be wondering, what is the difference between the total manufacturing cost and the cost of goods manufactured? Well, that's a really good question. The total manufacturing cost is literally just what it sounds like, the total of all the production costs in that period, being the direct materials, the direct labor, and the factory overhead. Whereas the cost of goods manufactured is a little bit more specific. It wants to know the total cost of goods finished in that period. So that's going to take one more step to figure out how much we're actually finished, rather than just the total cost. So what better place to turn than back to our cookie jar? The exact same idea applies. We want to find the cost of goods manufactured, which is the cost of the goods finished in that period. This takes the place of the cookies eaten, which is our unknown. The beginning cookie balance turns into the beginning work in process. Let's assume the good that this company produces is chairs. We assume that the chairs that were in process as of the beginning of the period will be finished in the period, and therefore will be included in the cost of goods manufactured. I'm using the icon for 4 chairs here, but we would be using the cost of those chairs. I'm also using the icon for an entire chair, although I realize that when a chair is in process, it's probably not fully assembled yet. Next, the cookie purchases turn into the total manufacturing costs. This was the line from before, which represented the total production cost that got added this period. Instead of adding cookies to the cookie jar, we are adding the new product costs to our total. This gives us the total cost of work in process, kind of like the total number of cookies in the cookie jar just before anything was eaten. This is the total cost of all work that was in process this period. But as of the end of the period, there will still be some chairs that are in process, the ending work in process, just like there are some cookies left at the end of the day. These chairs were not finished, and their cost should not be included in the cost of goods manufactured. So just like the cookie case, how would we find the cost of goods manufactured? Well, if we started with 4 chairs in process, 3 more were manufactured, bringing us to a total of 7 in process, and we know there's only 5 chairs left over at the end. That means we have 7 minus 5 equals 2 chairs that were finished this period, and their cost would become the cost of goods manufactured. Now, just like before, there's a little bit of rearranging we will want to do. We want to solve for the cost of goods manufactured, so we'll want to put that on the right side of the equal sign. So let's make that switch right here. And then also, since the total manufacturing cost is actually what we solved for in the previous section, that was the total of the direct materials, direct labor, and factory overhead, that kind of makes more sense to be the first number we put here. So we can just switch the beginning work in process and the total manufacturing costs around. And there you go. This is the exact form of what you will see on the manufacturing statement to solve for the cost of goods manufactured in the final step. Alright, it is time to finish the manufacturing statement. I pasted the titles to what we were just discussing just a moment ago right here. So we need to take the manufacturing cost and add the beginning work in process inventory from January. And we see over here that's $4,900. And when we add those two numbers together, we get a total cost of work in process of $33,200. Then we have to subtract the ending balance of work in process. That's right here for $5,000. And that will give us the cost of goods manufactured. So when we take $33,200 and we subtract $5,000, we get $28,200 for the cost of goods manufactured. And we are done. We have finished the manufacturing statement. Now you may have noticed that there were many accounts over here that we didn't end up using. And those accounts are going to be used in our next video when we cover the income statement for manufacturers.